chairs are just sitting on right now.
Hello, everyone, and welcome to One Chair. As a reminder, none of what you will hear is financial advice, and this podcast is for educational and entertainment purposes only.
Hey, everyone. All right, so we've got a packed episode for you today again. So in this episode, we'll be looking at a few news from MSTR. We have news from Metaplanet and Semler Scientific. We will have a discussion about why MSTR is not a Ponzi scheme, and we will be presenting to you our new qualitative criteria framework to be able to compare those different Bitcoin treasury companies. All right, so let's kick it off with the MSTR news. So MSTR presented their new ATM, and by doing so, they had a whole presentation. And I don't know, Quentin, maybe you want to start with a few comments there.
Yeah, sure. So we can actually start right away with the first slide for today. We presented it already last week. It was the unrealized gain that the strategy was forecasted to have for the second quarter of 2025. And here in this presentation, they showed it super nicely on how this is calculated. So it's nice to look at this first. So we have here the Bitcoin holdings that the strategy had at the end of Q1 with 43.5 billion. Then on those Bitcoin holdings, they have price appreciation on those for quarter two. And this change in price is a 13.4 billion increase in value. And then during Q2, they also purchased additional Bitcoin for a value of 6.8 billion. And on those 6.8 billion, they have an unrealized gain of 700 million. So this gives you the total unrealized gain for quarter two is the 13.4 plus the billion plus the 700 million, which gives you the 14 billion that we forecasted last week here. Then, of course, they will have to pay taxes on that. And at the end, I think we're calculating around 11 billion of pure profit for Q2. But here you can see how this was calculated.
Yeah, no, it's a great overview. So at least from that aspect, we were correct, right? And maybe it's worthwhile also mentioning that we were wrong about a few things last week. The first one being that they would have 600,000 Bitcoin by this week. We forgot to take into account that there's a blackout period before the quarterly earnings report. So obviously, strategy won't be buying any Bitcoin in the coming weeks. So we'll have to wait for the 600,000 mark until the report is out, or at least the call is out.
Exactly. They were not able already last week to hit the ATM on the preferred or the common stock, right? Which is probably also one of the reasons why all of those instruments performed so well last week. We were thinking back then that it would give them the opportunity to sell those shares into strength, but they're not able to and won't be able for the next few weeks. So it will be also nice to see how those instruments react in terms of pricing, because as mentioned last week already, the preferreds have all appreciated greatly in value. Strife and Strike last week, and now Stride is also giving a run at it and almost hitting $100 yesterday.
Yeah, and maybe just one point to add on this blackout for all the listeners that may not be aware. So every quarterly earnings reports that publicly traded companies issue, there's always a blackout period of about a month prior to this. And that's the reason why the strategy is not able to tap into the ATM or any ATMs for that matter. Maybe we can start segueing into our next slide. Strategy showed an overview of the biggest companies holding treasuries. And it's quite impressive to see that they are with their 65 billion Bitcoin at number 11 as of the report. And that just shows you the magnitude where strategy is playing with, right? They're on the A league, basically, with all these other companies.
Yes, exactly. And that is one of the reasons why we believe strategy will be one of the biggest companies in the world within the next decade here, because their financial strength is already great today. If Bitcoin continues to appreciate in value, this will only get stronger. currently their business model is to provide financial instruments to give Bitcoin exposure to the market, to different market participants in a different way, as we already talked about many times in previous shows. They're tapping into different markets with different financial products. The question is, what will they start doing once this is saturated? But they are sitting on a very large corporate treasury.
Yeah, exactly. And again, maybe to reiterate, you see the names here, and you have Amazon, Google, so basically the Max 7 more or less. And when you start comparing these market capitalizations with strategy is at number 100, right? So with their roughly above 100 billion worth of market cap. So there's ways to go, and I think it just shows the strength of strategy and also how liquid it is, right?
Yeah, one more thing to add on this one is you can see that all of those companies, they hold cash or cash equivalents as their corporate treasury here versus strategy that holds Bitcoin. And that's the whole differentiating factor here. And that's the USP of strategy. If you think about the history of where MicroStrategy at the time was, and they were sitting on a lot of cash or cash equivalents like all of those companies. But they had a problem on their hand because this cash was melting away because of inflation and they didn't know what to do with it. And this is the same situation that those companies find themselves in now with their treasuries, right? So compared to strategy, all of the green bars, it's kind of melting away, while strategy is sitting on the pristine collateral that is appreciating at an ARR of 30 to 50% a year. So even without doing any more treasury operations, they would probably end up on top of this leaderboard by doing nothing. But that's not what it is, right?
And I think we will see this chart move quarter by quarter, right? So strategy will start going up in the ladder while the rest of the companies more or less sit still with what they have, right? I don't see that changing much. So it's going to be an interesting evolution of this chart going forward. All right, so let's move on to our next slide. Also taken from the presentation of strategy. And here they present their institutional capital mandated equity and credit buckets. This is just piggybacking a little bit on our last discussion, right, on the total addressable market for fixed income and Bitcoin overall from last week's episode. Strategy, they came up with now the actual numbers that are, as mentioned here, so the capital that is mandated by institutionals. So that means that they have a specific mandate to invest in specific securities. And according to them, it's 35 trillion of equity and 60 trillion of credit and 3 trillion of commodities. So this is now what they see as their addressable market for their products. So MSTR, STRF, STRK, and STRD.
Yeah, exactly. So specifically on the institutional capital side of it, right? And it shows the problem that they solve for institutional investors, because an institutional investor who wants to invest in Bitcoin, so far it's only a 3 trillion part of the pie that could directly invest in Bitcoin. And all the institutional investors that are mandated to invest in equity or credit, they could not get any Bitcoin exposure. And with their financial engineering, they provide the market with the possibility to invest indirectly in Bitcoin with their instruments.
Yeah, exactly. All right. Let's keep moving to our next slide that we want to present. This is probably the main announcement from strategy, right? That they are now issuing an ATM for STRD of 4.2 billion. This slide shows quite well where they stand on terms of their raising the whole capital for their 4242 plan. But it also shows the different ATM capacities that they currently have, right? So they still have 18.1 billion worth of MSTR. They obviously have the full 4.2 billion of STRD, 20.5 billion of STRK, and 1.9 billion of STRF left on their ATMs.
Yes, exactly. It's a good overview to show you how much powder they have left, basically, to continue to accumulate more Bitcoin according to their latest plan, right? So it's an overall plan of raising $84 billion to purchase Bitcoin. And on the equity side, they are over 50% executed on that already, with 18 billion left. And the fixed income side, with the converts, but also the preferred shares, they have a lot of room here to grow that portion still. And with the latest addition of the Stride ATM, they basically completed the ATM for all of their preferreds with that. And it's interesting to note that at the bottom here that they still have a long-term leverage ratio target of 20 to 30% through the issuance of fixed income securities. And here we are at the lower end of that for now. So they have a lot more room to work with those preferreds to reach their target.
What I find curious is that their main fixed income security that they're trying to bring to the market is STRK, right? With the initial 21 billion worth of ATM, right? Especially if you compare it to STRD 4.2 and STRF 2.1 billion. So it's clearly like an order of magnitude higher than the other two. And I'm wondering if it has to do with this embedded call option, right, that the STRK has. Because if they issue a bunch of preferred equities on with STRK, eventually, if they get converted, all of these suddenly turns into equity, into MSTR. And therefore, they wouldn't have all these dividends to pay. So I'm wondering if that's the idea behind this bigger ATM on STRK. What would be your thoughts on this one, actually, Quentin?
Yeah, I mean, I have the same thoughts on that, is that they are able today to issue those STRK products at a huge conversion premium, right? That the stock would still need to run quite a bit for it to convert. So they can issue funds today to purchase Bitcoin at today's prices at very attractive conditions. And since all of those Strike shares can and at some point will be converted into MSTR shares, it's the only instrument here that they have that allows debt to be reduced by just issuing more common stock. Or actually, it's the same as the converts, really.
Yeah, I think it's just a smarter way of issuing converts, right? At the end.
Yes. Yeah, because the converts that they issued so far, what was it? The strike price was around 50% above the current stock price.
Yeah, something like that.
And here with Strike, currently they are 150% higher.
I think that also probably already kind of indicates us that they will be coming with new products right into the market, because anyways, once MSTR hits 1000, most likely there won't be any more ATM on STRK at that time. They will need to issue a new preferred equity or another product for that matter that replaces it, right?
Yeah, there will probably be a similar product with a higher strike price again that they issue.
And maybe by then also a lower yield, because hopefully their preferred equities will have already some credit scoring or something like this from S&P or Moody's, right? And that will help as well to lower all the dividends that are being paid on these securities.
Yeah, and the reason, moving to Strife, the reason the ATM is the lowest on Strife is also clear, is that because it's their crown jewel, they call it, right? It's the highest in the capital stack, and it's the safest investment. It's investment grade preferred share, that where you really have the lowest risk of all to getting your money back or getting great dividends. So that's why they want to keep it at a small number.
So I think the ATMs on these preferreds up until now really make sense. Great. All right, let's keep moving and shift gears a little bit, right, to our next topic that we want to talk about. Over the week, there was an interesting article in the Bitcoin magazine talking about Bitcoin treasury companies. The author at some point questions whether MSTR is a Ponzi scheme. And actually, that's something I've been hearing a little bit more over the last few days. we thought it would be a good idea to briefly go over it and explain why MSTR is not a Ponzi scheme. And maybe here, Quentin, you want to set the scene?
Yeah, sure. So maybe what is the argument in this article of why MSTR or strategy looks like a Ponzi is that the way they plan to raise money to pay the dividends on their preferreds is what the author is looking at, right? Because they issue shares at the market, then they have to pay dividends on those shares. And the way they are supposed to pay the dividends is by issuing new additional shares, which then, if you just look at that, it is the definition of a Ponzi scheme. It's right, because you issue new instruments to pay the investors that were there before. And it all falls apart when you can't find anyone anymore to purchase the new ones. And that is true in that sense, but it doesn't look at the whole structure of the company strategy and the fact that they actually hold, we saw in the slides before, they hold 65 billion worth of Bitcoin on their balance sheet. So it's not like they don't have any way to pay back those dividends. And I don't think strategy ever communicated that they would issue more of the same instrument to pay those dividends. They just have a lot of flexibility to issue whatever is best in the market at that point in time. And we saw, for example, for the Q2 dividends, they had around 50 million worth of dividends to pay. And they just issued the common stock ATM because it was the best thing to do at that time. It took them a half a day to raise the 50 million for the full quarter's dividends. So that was the right thing to do at that time. Maybe next quarter it will be something else. They just have a lot of different options. Worst case, they still sit on all of the Bitcoin that they could also use to pay back dividends.
So as we saw, right, they have 65 billion worth of Bitcoin and the dividends paid were at 50 million. So you're talking a small fraction of this, right? So they're good for their money. That's essentially what's happening is they're being backed completely by Bitcoin. And it's a very liquid asset. Obviously, you could argue, if you're not a Bitcoin believer, then yeah, you could argue it is a Ponzi scheme because you believe that Bitcoin is a speculative asset and that probably it won't be outperforming fiat over the long run, right? But that's probably the only view that I would see where calling it a Ponzi scheme makes sense. If you're a Bitcoin believer, then as mentioned, you're backed by Bitcoin. And maybe just to bring an additional point here is obviously their operating model is selling Bitcoin-backed securities, right? So they're selling, again, STRF, STRD, STRK, and MSTR backed by Bitcoin, and those are their products. So essentially their investors are also their customers. I think it's just a unique setup that you need to shift your mind to understand what they're selling really. It happens that their securities are also their products. So it takes a little bit of time to wrap your head around that, I think. And I hope that clears out a bit of the fog around this hard belief that MSTR is a Ponzi.
And we need to look at the whole scale of it, right? We already showed last week, we can flash it up again, is the current notional value of those preferred shares in the market. So today with those three instruments, they have 3.4 billion worth of shares outstanding. Assuming a 10% dividend, that's 300 million per year of dividends that they need to come up with, right? And again, that's against the 65 billion of Bitcoin that they hold. So it's not leveraged at all in that sense. Of course, if they had 100 billion, it might be different. But then by the time they have 100 billion outstanding, probably their treasury will also be a lot bigger. So it always also is in relation to their treasuries that you need to look at these things.
And maybe just one last point here is also that it's not much different than a company who has a tremendous amount of leverage and keeps rolling it forward, right, to cover their operations, I would argue, if you're looking at it from a fiat standpoint. All right, maybe just one thing to end up here is obviously this is a bit of a more controversial topic, right? So if there are questions that remain, comments, feel free to add them on our YouTube channel or just ask us on X. We're quite active and we're happy to answer all of these questions in a future episode and maybe deep dive further if there's still some uncertainty or unclarity somewhere there.
Very good. So let's move to the next one. It's just an interesting slide again that we found that on X from Chris Millis. It's a nice overview of the different types of strategy investors. And we've talked about this before, but we thought maybe it's good to flash it up again. Who is strategy for? And this summarizes it quite well with the different products that they offer. With the first type of investor is a risk avoider, wants the safest investment possible, and that's the crown jewels, Strife, that you would invest in, nice dividends that you have, highest on the capital stack. In case of an MSTR bankruptcy, you get your money back first. And yeah, the safest investment you can have there. Then the dual optimizer is you want your Bitcoin upside, but you also want to get some fixed income and some downside protection. And then it's Strike that we've talked about in a few of our previous episodes, with the floor that you have due to the dividends that they pay, plus the upside due to the call option on it. Then the third is a yield maxi, with the highest yields being on the Stride product. Also the preferred shares, you are senior to the common shareholder, but lower than Strife and Strike. So the yield is higher. And then the passive Bitcoiner who invests in MSTR, and also the return maxi investing in MSTR. The return maxi because he sees MSTR as a leveraged Bitcoin play, and the passive Bitcoiner because the way I interpret it is because you can buy the shares on your brokerage account, and you don't need to self-custody or go on to Bitcoin rails to get your Bitcoin exposure here. And the last one is probably the most important one, and really solving problems for some investors. It's the ones that want to invest in Bitcoin but can't, right? We saw those institutional investors before with the mandates, but we've also talked about certain jurisdictions that don't allow you to invest in Bitcoin directly, or Bitcoin ETFs. And there if you can invest in equity, then MSTR is also a good option for you.
Yeah, and it's a nice way to frame it as well, because obviously we're always talking about those mandates from institutional investors, but I think you also tap into different pools of retail, right? Where everybody has their own risk profile and wants to adapt their portfolio based on their own likings, right? So I like this as well, the way that it's framed. All right. I think we've talked quite a bit about strategy, so let's bring on some news of Metaplanet a little bit and Semler. Yeah, I don't know, Quentin, do you want to start here?
Yeah, so on Semler, I can go. So Semler has had some interesting developments over the last weeks, right? It was a stock that was performing very poorly for the last 6 months, sometimes trading below 1 MNAV, really compared to the other Bitcoin treasury companies, not doing well at all. And they turned it around a bit now with appointing Natalie Brunel to their board, and also working with Joe Burnett as their treasury strategy guy. The stock has turned around a bit, but we also see it now on their Bitcoin purchases, with the first purchase that has been announced in a while this week. And also some other interesting news. We don't know details yet, but it looks like they will also be coming out with a preferred share, according to their latest filings. So this will be interesting to see, and it looks like there's really something happening now in the background to adapt their Bitcoin accumulation strategy.
Yeah, so Semler Scientific will have a shareholder meeting, I believe, somewhere in September, where they will vote on these preferred equities, right? So let's see if it goes through, but it looks like they're adopting the Sailor Playbook 2.0 with the preferred equities. To be honest, I'm very bullish on Semler. I like what they're doing. I like that they understand the playbook and they're really trying to adapt. Although the market seems to still punish them a little bit for this dual strategy. And I keep hearing as well on different podcasts or different channels that a lot of people don't like these dual strategies. They like the pure play. And that's a shame, because Semler does understand it again. And you can see that they're going all in on the treasury strategy as well. But just because they keep hanging onto their operational business, which is actually profitable, they're being left a bit behind compared to a strategy or a Metaplanet.
And I think the opinions will change on that. It's just now where every Bitcoin Treasury company stock is very hot and the pure plays are getting rewarded more. But again, we also need to think about other market conditions and what happens in a downturn. And there, it's definitely nice to have a profitable operating business to be able to pay potential dividends or pay back potential loans or accumulate Bitcoin at a discount, right? And the companies that do have free cash flows in those moments will definitely be valued more than the others.
Yeah, I do believe in the long run, Semler will be rewarded if they continue executing the way that they have. So I'm looking forward to exactly see those tests, because then you will see how strong the Bitcoin Treasury companies really are, right? Once they go through at least one bear market.
Okay, so you want to talk about Metaplanet?
Yeah, I think we should give it a small mention. So Metaplanet accumulated this week 2,205 Bitcoin, which is a huge amount for their current stash, right? So now they're holding 15,555. And I have to say, I also like the fact that they're always coming with those interesting numbers on their balance sheet with the Bitcoin holdings. So I'm really looking forward to continue seeing the meticulous execution from Simon and Dylan on Metaplanet. One last thing I'll mention on it is actually it's quite nice also to see that the MNAV has reduced a little bit. Looks like the numbers seem a bit more sober, in my opinion. So yeah, it doesn't look so frothy, right, as of right now.
Yeah, and that's why it's important to look at metrics in combination, right? We've talked about the concept of MNAV, but also to look at it in combination with the Bitcoin yield, because this is exactly what has happened now on Metaplanet. Less than a month ago, they had an MNAV of 8, so overvalued if you only look at that. But they had shown in the past year a 300% Bitcoin yield, right? Which means they are able in 4 months to double their Bitcoin holdings. And this is exactly what has happened in the last 3 weeks now. That their share price is still around the same, but they accumulated a lot of Bitcoin. I think they have 75% more Bitcoin now than in early June. So their MNAV actually compressed down to 4 now, and it looks a lot more reasonable. And this happened in the span of less than a month, right? So you also need to look at the ability that those companies have to accumulate Bitcoin and how quickly they're able to do that. And then those multiples start to make a bit more sense.
Yeah, no, exactly. And I think it's going to go back up, right? At least on the short run. But it's also nice to see that it's not just expanding all the time. I like the compression because it brings it back to reality. And that means that there was a little drawdown, and that signals that it's a healthy market at the end. So I like that. Yeah, let's move to our last topic of the day.
Yeah, so what we have put together for this one is something that we haven't seen anywhere on any other podcasts or on X, is to try to evaluate those Bitcoin treasury companies in a qualitative way by defining some qualitative criteria and not only looking at numbers that we've discussed a lot in the past, like the MNAV or others, but what are qualitative criteria that could define the success or failure of those companies going into the future. So Yves, do you want to maybe start with our first slide and explaining the criteria we came up with?
Yeah, just to maybe quickly reiterate, I think it's important to also look at the qualitative aspects of a company, not just get lost in the numbers, right? Because it's very easy to get lost in numbers. So I think there should be also a proper story behind any company. And that's why we came up with this framework. Obviously, it's a novel idea. So we're still working on it, but we thought we would already bring it up. We will for sure be working on it and improving it over time. Yeah, let's get started on the first criteria on this list, which is accumulation strategy, right? That's how the company invests their fiat proceeds, but also how they intend to manage their Bitcoin treasury. So obviously there's two parts to these criteria. Maybe just to take one step back, criteria can be a lot of things. So you can combine them or even spread them into smaller components, right? So that's maybe one thing to keep in mind. And so for this one, to start off is, for example, how would the company invest their fiat proceeds means whether they're aggressive, right? Like a strategy and they just buy the next day as soon as they have the cash, or if they DCA. Currently, that's the strategy of the smarter web company, right? They always have a bit of cash. They just buy some every once in a while.
Yeah, and on that, I think there could be another criteria as well. I mean, DCA dollar cost averaging would more mean that they buy every day a little bit or in regular intervals. Some companies have also mentioned that they would be more like trading it, right? And or buying on dips. So waiting basically for Bitcoin to fall in price and only buy at that point.
Yeah, exactly. So that's, I would say, a little bit more speculative, right? So unlike a strategy or a Metaplanet where they have consistently communicated that they would not sell their Bitcoin, right? So you should be looking at this when you evaluate the Bitcoin treasury company that you're looking at, right? So the next criteria is communication. And here by that we mean how often and how does the leadership communicate to the market participants, but also how much information does the leadership bring to the market participants, right?
And here we have some big differences in the companies we're looking at, with on the top of the class, the Metaplanet and strategy with super transparent communication and the information to the market participants. And on the other side of the spectrum would probably be something like a GameStop, where we don't really know what they do. Also talking about accumulation strategy goes into that as well, right? They have billions of dollars on their balance sheet. They have hinted at wanting to buy Bitcoin. They have announced one Bitcoin purchase, but it's less than 10% of their treasury value. So it's not really clear what they plan to do. And that's a sign, and it has been criticized by many, right, that they're not very transparent with what they do, and also the market has been punishing them because of that.
Yeah, no, absolutely. And that's a great segue actually into the next criteria, right? Conviction. So what is the conviction of the leadership about Bitcoin, and also signifies who are the leaders, right, of the company. And as you just mentioned, right, GameStop doesn't seem to have the conviction that you want from a Bitcoin treasury company, right, in Ryan Cohen. And unlike a strategy with Michael Saylor or Fong Li, and a Metaplanet with Simon and Dylan. Okay, so next criteria, innovation. I think that's a really interesting one. This is how the management is able to come up with new ways to accumulate even more Bitcoin. Here, I think strategy, for example, is as a prime example, right? They come up with those preferred equities every now and then, and they blow everybody's minds, and they're able to accumulate further Bitcoin through these novel instruments. I think Metaplanet is a good one as well, with their, for example, their strategy with their selling their put options, right? Let's see what else they come up with.
And the smaller companies as well, with the blockchain group, with their Bitcoin denominated debt that they take on. So there's a lot of innovation in the space. It will be interesting to see what all those companies come up with, and will probably also be different depending on the market that they operate in.
Yeah, I think the jurisdiction will be a big factor, right? The regulatory aspect will for sure impact innovation. Great. So next one is track record. I think this one's pretty self-explanatory. So how long and how has the company performed accumulating Bitcoin? Obviously, a strategy has been operating for many years, has overcome a bear market. So they have a really good track record. On the other side of the spectrum, you would have all these new Bitcoin treasury companies that have existed for a few months. So not a lot of track record there. And last one, and I think probably one of the most important ones, is bear market outlook, right? How well equipped is the company to survive a potential bear market? And here we're talking a proper drawdown of 50 to 80%, right? So far, I think strategy is probably the best placed, right? And yeah, the novel ones will need to prove themselves, right? Because up until now, most of them are just operating with equity ATM vehicles to accumulate Bitcoin. So
especially the pure plays here, as we discussed before.
yeah.
I think they will need to come up with some good strategies before the next bear market if they want to survive.
Yeah, no, absolutely. Yeah. So again, that's where we will see probably the strength of profitable operating businesses alongside a Bitcoin treasury company maybe dominate over the pure plays, right? Yeah. So with that said, we can maybe just briefly go to the next slide where we try to compare all of these criteria amongst our four usual companies. So Strategy, Metaplanet, Semler, and the blockchain group. And yeah, you can see, as mentioned throughout the previous slide, I think Strategy is the prime candidate. They're the strongest one with obviously the longest track record, but also they're the ones innovating the playbook. So they basically are writing the rules more or less, right?
Yeah, exactly. And then on the other side of the spectrum, you have the blockchain group that has a few low scores here, but not necessarily a criticism because the track record, they are new, so they can't do anything about that. But also on the transparency and bear market outlook today, there's a few question marks on how they would, for example, survive a bear market without a solid plan on how they could accumulate during that period or be able to stay liquid during that period.
Yeah, absolutely. And I think that they will be ranking higher on our criteria as they go along, right? So for example, transparency, I suspect that they will also come with a nice dashboard the same way that Strategy, Metaplanet, or Semler has, right? They'll be able to present in a better format all their metrics than they currently do. Maybe just one caveat for Strategy, right? For transparency, the one thing that is lacking basically is their proof of reserves, which has been a big source of debates, I think. And I think at the end of the day, it's not a big deal, but it's still worth mentioning.
And on Semler, we have the innovation at a low because just of the way they have been operating now in the last year since they announced their Bitcoin treasury strategy. There wasn't a lot of innovation. They issued shares at the market. They took on some debt. They translated some of their cash flow into Bitcoin, but nothing very innovative yet. Now, with those potential preferred shares that they will be voting on, this might change. And I suspect it will change with the people that they brought on board. But for now, it's low.
Yeah, I mean, they're just following a Strategy's playbook up until now. They've been following it well, though. All right, great. So we presented everything that we wanted to bring to you this week. So let's move to final thoughts.
Okay. Yeah, from my side, just to go back to those qualitative criteria, what are the most important ones for me? I think on one hand, it's the communication and leadership of those companies and how clearly they're able to communicate their strategies and also their conviction in Bitcoin. I think that's what really is the main differentiator there for now. And we really see it with Metaplanet and Strategy being world class at that and being rewarded by the market for that. And the second one is the bear market outlook, which really for me, currently, I only see Strategy with a very well thought out plan to survive a bear market. And they also did survive one in the past, an 80% drawdown on Bitcoin, and prove that they're able to survive. So the others will need to show what they can do, but it will be interesting to see and will be the big differentiator in the end before the next cycle here on those companies.
Yeah, no, absolutely. And I completely agree. I know a lot of people like to focus on the whole qualitative and really focus on the numbers, but I think looking at it from this aspect is also very important. At least that's what I do as well, right? So we're trying to bring you this framework so that you try also to differentiate those different companies as well from a narrative standpoint. And I think that's important as well. The same way that you would have the risk framework that we brought to you last week. All of these combined is how you need to make those assessments in terms of those Bitcoin treasury companies. And I'm really curious to see as well the new entrants, right? Because we have a bunch of bigger companies like 21 Capital, Nakamoto, Strive, more recently the Pompliano SPAC merger as well. They haven't properly operated yet, so we can't really value them. At least I can't value them the way I like to do things, right? So looking at it from not only the quantitative aspect, so the numbers, but also the risk framework and also the qualitative criteria. And yeah, so I'm really looking forward to see them operate so I can start valuing them better. And I hope that everybody does their due diligence as well when they start looking into them, right? Yeah, with that said, I think just be careful out there and make sure that you make your homework. Yeah, see you on the next one. Cheers.
Bye-bye, everyone. See you next time.
How many chairs are you sitting on right now?